Peeps. I mean, there are so many things happening in this thing, and when you actually read in between the lines, it is ridiculous. It's funny. It's funny how, enfin, je veux dire, it doesn't make any damn sense. You know what I mean? Because let's try to connect the dots here. Let's try to follow the money and follow what the market is doing and where the market is headed to see exactly what AMC will do as well, as a reaction to that. So first of all, let me start with this. Today was kind of I don't want to use the term bad day because we are so used to it, but AMC closed around 9%. I mean, 1 hour after the beginning of the trading session, I was kind of hoping, it's not that too bad. It will maybe close around maybe 32, maybe 33. It will be good, all right? Because the highest so far today was 32.75. But actually 32.95, so almost close to 33. But I was kind of expecting this yesterday after hours because when I saw GameStop reported earnings yesterday, it sank to 8% after hours yesterday, all right? So we already have established here that GameStop and AMC are trading in tandem. They follow kind of the same pattern, not literally the same, ups and downs every single minute of the chart, but they are kind of impacted, and restricted by the same guy on the other side of things, if you see what I'm talking about. Now, when GameStop reported earnings, they didn't actually beat the expectations. And you can see here on, that they missed 168% on the EPS, the earning per share, so the profitability for this quarter, but they beat 9% on the revenue. So things are not that bad. And as soon as this popped, I was kind of sure like, hey man, 10%, I'm sure AMC will also close like, at around 10%. But here's one of the most interesting part, folks, before we get into, the juicy part of the video. You have GameStop stock falling after earnings and everybody is saying, well, we sell, we downgrade. But Jeffries is saying hold and hold for life. All right. So why is she staying hold? Jeffries analyst Stephanie Winsink was more upbeat, though she also cut her target, lowering it to 180 from 190. So it's $10 a share. But she wrote that GameStop, it's still doomed to flourish. Pretty much she's saying that recognize that management is speaking to both, retail investors and sophisticated suits, providing just enough strategic visibility, but yet leaving room for both dreamers and discounters. She pointed out the company's sales mix, which now includes more sales related to PC gaming hardware and thus less dependence on games, which are increasingly sold via digital channels. And this is one of the main concerns on the street regarding GameStop. But there is also a transformational, a deal with more technology-focused world, including investment and infrastructure, and also blockchain technology, Web 3.0, that ultimately will lead to the metaverse. So for 2022, this is actually a very positive sign, and that's why she's saying you should hold GameStop. And I think it kind of makes sense here, according to my personal opinion, all right? Because if GameStop was really supposed to go back down to $20 a share, why so far, since almost a year now, it hasn't done so? Same thing for AMC. Now, let me connect the dot here because this also will give you another insight on what's happening. First of all, today also we had China Evergrande defaulting on its debt, and I share with you, details on this on my previous video. Now, let's pause for a second here, folks. I'm thinking, well, hedges have been using collateral or have been using Chinese debt, possibly Evergrande or something else, to show collateral to the brokerage firms while using those as a reason to sustain and keep their short positions in AMC open. Now that Evergrande has defaulted, they can't do that anymore, all right? So the brokerages are kind of like, next month, I wonder how you guys are going to, justify why you should keep those positions open, because we're talking about billions and billions of shares possibly, all right? Now, next year, we also have potentially and inevitably interest rates increase, all right? So when interest rate increase, it means less money available. Money is going to be tight. Credit facilities are going to be a little bit higher than they are now. So it's not going to be as cheap to maintain those positions, and it's going to cost so much more than they already are in the hole to actually continue to short this stock to oblivion like they do now. But on the other side of things, you have the apes still not selling, still not going anywhere, and Wall Street insiders and analysts, the suits, kind of reading in between the lines and seeing that, hey, maybe these whole meme stocks are not that meme as we thought, because they're saying hold, all right? So bottom line is, it doesn't matter whether they want to continue to do this another 6 months, another 12 months. It doesn't matter if they want to, double down and pushing the price down to $25 a share or even $10 a share. We are still not going anywhere, and it doesn't change any damn thing to the fact that they are doomed to lose and to lose big. And when they lose big, that's when you and I collect the tendies. So I don't know about you, but I'm getting even more bullish on AMC than I was last month.